Hello, everyone, and welcome to this market update. I'm here with Chris Regan, who leads Brady's short-term power trading software business. So, Chris, what's new in the power markets?
So lots of things, Alex, are going on in the market at the moment. We're seeing quite a rise in the use of algorithmic trading, something I think we should talk about as part of this discussion, which is increasing liquidity, and that in itself increases complexity. At the same time, there's quite a lot going on about the move to the 15-minute market. So you might have seen in the news that EPEX have come out and said that they don't think the market's ready, and at the end of May they'll be voting no go for the mid-June go live of the move to the new 15-minute coupled market, whereas Nord Pool have said they think everyone's ready and they're ploughing ahead. So we've got a slight disjoint between the two major exchanges in Europe of how we're going to move forward. And so it'll be interesting to see how that outturns. I think there's a lots of IT shenanigans going on of people being behind and ahead on products and projects, sorry, and so they're going to be needling each other as competitors do. But obviously, the main thing that's happening at the moment, as we talk on the 29th of April, is we're seeing Spain and Portugal just return to having the lights back on. At this time, I don't think the cause of the power outages are known, but what it does highlight is a proper balanced market with good redundancy is very, very important. And we saw that in the UK with the outages at Heathrow Airport not too long ago, where a small failure of a substation led to widespread chaos on a nation. So as countries go forward, I think security of supply and redundancy in the backups is going to be very important. And for that, I see more and more investment in technology types like batteries, because whilst we like security of supply, which came naturally with coal and gas generation, because they were so flexible and dispatchable, we're going to have to augment our need for low carbon with the wind and solar with batteries and kind of those kind of technologies as well.
So, Chris, is it the growing amount of renewables that's driving this move to 15-minute settlement periods, or is there more to it?
There's more to it. It's Europe and ACE's kind of quest for harmonization. So the 15-minute market rule was originally came out of ASA probably over a decade ago, with this view that there would be harmonized and lower prices overall to the consumer if all the markets operated the same and we have interconnected markets with the same rules. So you can't have a market trading hourly products next to a market trading quarter of an hourly products and find it very easy to move power between. But the ultimate goal of harmonization and kind of the European mandate on energy is to lower the overall price to consumers. And that means that if you've got excess generation in one country and you've got high prices in the other, you harmonize the overall cost and reduce it by allowing the easy flow of energy between borders, between technology types, between customers. So as we move forward, you'll see that some of the balancing services under MARI are trying to be harmonized. So MFRR is going to look very similar. So that's a kind of a manual frequency responsive. But of course, the fundamental thing is making sure everyone trades in the same time unit. It didn't quite work with the GB, because one of the things in the ASA guidance was you have to move to 15-minute markets unless you can show it was extremely costly to do so with little benefit. And so very quickly, the GB didn't see the benefit, but then of course Brexit happened. So there was no need for the GB to kind of follow those rules without kind of question. So at the moment, there's no imminent plans to go in the GB less than half hour. Lots of people talk about very short settlement windows, like 5 minutely, whereas we move to like batteries balancing. But that would be a bit difficult with liquidity, and I think it would make the market very complicated.
So then, Chris, how's liquidity in the short-term power markets going to change as we move to 15-minute settlement periods?
Well, I think I would split that between day ahead and within day. Day ahead, I don't think there's going to be any change in liquidity. There's going to be more instruments trading, 96 instead of 24 for the day. But people are doing that in a kind of non-time critical fashion. When you get your auction order ready, you prepare your auction order, you review your auction order, you submit it, the market clears and it comes back. And within day continuous market, you're trading all of the time and needing to look at it. So the workload does go up there. But what we've recognized in the market changes for day ahead is that a lot of the old-fashioned tools that people were using are not going to be applicable, and so we're seeing a lot of people move to SaaS products to enter their auction orders that are a little bit more helpful. So you could go direct to the exchange and use the Nord Pool adapter or the ETS adapter with EPEX, but they don't give you a lot of protection. Whereas if you take, for example, our PowerDesk day ahead solution, we have a number of tools we call the kind of PowerDesk day ahead copilot, which allow the traders to really make sure that they've got the right auction order in. And they do things like they'll allow you to put min and max tolerances in that are highlighted if you go between it. You could compare yesterday's order to today's before you put it in to see if there's a sudden change. So if you had a large generation asset returning, you'd be able to see that by comparing to yesterday's. And if it was very different with nothing changing, you'd question it. We also have things where you can simulate a price forecast or yesterday's price and today's order to see what would clear. You get all of these protections to make sure you don't put a silly order in which suddenly comes in. And underlined to the product as well, we do live graphing and validation of your order. So if you were to put like a silly order in that had an extra zero on the end, you don't always see that in a tabular form, which is the way you put stuff into the auction, but you always see it in a graphical form, which we have constantly online. So we feel with the increase in granularity, more and more traders should have like a co-pilot, like our PowerDesk solution, to make sure that their auction order is going in correctly.
And so then what's Brady doing to help people adapt to these and other market changes?
Well, I think I can think of two examples of what we've done. I'll start with our PowerDesk Core product. Our PowerDesk Core product can operate in 15-minute, 30-minute, 1-hour intervals. So you can still see everything in a familiar guise, but you can change between. Then what we've done is we've added a consolidation screen so you can look across all the markets. And if you were trading positions in France, Germany, GB, Norway, etc., you can see all of your net open positions on that screen, and we group them by market time instrument. So all the half-hour markets, just the GB, are there. All the 15-minute markets are collated, and the 1 hour. So you can see the ways that your position is evolving holistically over Europe rather than each country individually. We've also added a very specific Nordic ancillary service, which was very difficult under the new market, called MFRR. And under that, previously traders would recalculate the volumes that they could put into this ancillary service, which was dependent on how much they had traded, because you would trade your asset and then it would have headroom and footroom, i.e. it could turn up and down. And from that, you could calculate how much you could offer the TSO to turn up and down. And most people used a manual process or a spreadsheet to do that, and that was only 24 numbers a day. Now it's up to 96. It just doesn't work. So we've automated the process in our PowerDesk Core solution, whereby when the asset's rescheduled, you can automatically calculate the headroom, footroom. It uses price pairs that you used before, and it submits it to the TSO as well. So it's just really automating the solutions, what I call admin, so that the trader can go buy and sell and try and get best value, rather than the trader's role kind of evolving into a kind of admin and operations role, which I know they would hate to do. The last thing that we've obviously done most recently is you see a lot of trade automation coming in. So with our Brady suite, we have two levels of automation. We have the classic if this then that type rules. So we have a thing called rules-based trading, which is very similar to what we see out on the market. But then we have a full algo solution, which is a really much more of a kind of command line data scientist tool, and that's where you can encompass things like AI and various things to write algorithmic trading solutions.
So then, Chris, how's the way that people use algos in energy markets changed over time? And how does the algo trading product that Brady's developed called PowerDesk Edge fit into that?
Sure. So I think when you look at some of the early kind of movers in the algo space, I would describe that as trade automation. And that meant that the trader would look at some of their positions where there's not much value to be had, and say if the market does this, close like this, or that let's just have an offer to sell power at a similar price to what other people are offering to sell power. And so very simplistic rules, which meant so for your low value kind of positions that you want to close out, you don't have to sit there continuously working them. And that was great for people with lots on, lots of parts of their portfolio, etc. But ultimately, it wasn't a value based proposition. It was a kind of an operations improvement type position. There was no functionality to try creating better price. It was efficient closeout or opening of positions. And so that's great. But if everyone's doing that, I don't think it's an incredibly exciting market and you don't get a lot of price discovery. So what we've done with our Edge package is we've allowed the customer of Edge to create all of their own IP to trade. And so we're not selling algos, we sell an algo ecosystem where you can write your own algos. And it's very different from what our competitors are doing, where they'll write algos for you and then you and others will operate with all of the same IP. And what we do is we've created a Python library of the building blocks of a trading strategy. And with that Python library, it's like little Lego blocks. You have commands that allow you to aggress, commands that allow you to initiate, but then I call them like super trading commands. And we've got things like a slippage management command, which allows you to manage slippage, i.e. you've just missed the price in a certain way. And all of these things can be added up and they can be turned into a really, really strong algo. But because we're writing it in a language rather than a GUI, you can also import all of the very strong commands that are available in Python. So one of the ones that I've used quite heavily in my algo testing is scikit-learn. And scikit-learn uses machine learning to predict kind of things from big data. And so we've used that to pass data on lots of price movements over history and learn with scikit-learn. And with that machine learning, we then have a module where you can decide with certain confidence whether you think the price of an instrument is going to go up or down. And once you've got a market direction within your algo, then it's really a proper algorithmic trading. It's saying, well, I think the market's going to go up, therefore I'm going to buy early, or I'm going to sell late, or I'm going to trade this way. And not anything out there at the moment I've seen that really has a way for the trader to put direction in. So we always say with PowerDesk Edge, we're trying to trade smart, not just trade fast.
So then, would it be right to say that PowerDesk Edge gives you a way to more easily write and test and then deploy your own algos, rather than just prescribing you pre-made algos to use that everyone else is also using?
Well, exactly. And the way I think about it is if you looked in the finance industry, for example, where there's much more liquidity, there's much more fast algorithmic trading, you're going to see all of the individual banks writing their algos from scratch, but they generally write them in a fast language like C. So you don't see any of the banks going out there and saying, I know what I'll do. I'm going to create a whole new compiler language just for algo trading. They write them in C, but it's quite a lot of work because it's a very, it's a very kind of verbose language to write an algo in. When it came to energy trading, we do see some of the larger players writing their algos from scratch. So just using one basic language, but they're going to be doing a lot of similar things in the building blocks. So what we thought we'd do is we would take a language like Python, which is probably the most widely used by people in the data science community, for example, and enhance the language so it's easier to build algos rather than just build algos for them. And so, no one complains, oh, everyone's algos are going to be the same in the finance industry because they're all written in C. They're different. And it's the same with PowerDesk Edge. No one's going to complain all their algos are the same because they're written in Edge. It's a bit like saying all Python kind of libraries are the same. They're completely different. So we give people the power for individuality, but it means you're just writing them in a powerful language rather than writing them in a very low level verbose language.
So then, Chris, are you left to do this all yourself as a PowerDesk Edge customer? Or does Brady also provide some additional support around the process of backtesting your algorithms?
Yeah, I mean, at Brady, we've got a really good end-to-end solution. So we start off with, okay, you might not want to write all your algos to start with. So give us an idea of what you want to see, and my data scientist will encode it, show it to you, check it's right, run it through a scenario, and then share the results with you. And that's our back testing as a service. And then if you wanted to evolve, we can then set you up with a tenancy where you just have the back tester, and then you can put your own data in, and you can put your own independent data in. You might have a NIV forecaster that you particularly like, might have a weather forecaster, and then you can just test your algo on history. And back testing is key to the whole compliance process of checking that your algo works the way you want to. And then the next stage is paper trading. So you could run our algos or your algos in our system just to pretend to trade, but in a live timescale. And finally, you've got live trading. But the thing that's really strong about our overall ecosystem is it sits in with our other products. So I've got PowerDesk Edge algo trading, but how does it know what to trade? How does it know whether you're long or short? Well, it's already linked to our PowerDesk Core calculator, which is basically a trader's dashboard, which calculates whether they're long or short. So they know that they're buying or selling the right position. And how does PowerDesk Core get its information? Well, you can push it directly in from your systems, but it's already connected to our PowerDesk Data Manager. Our data manager can be the single source of the truth for all of your portfolio information, like forecasts, aggregate trade positions, and you can therefore live in that infrastructure. And if you're doing the longer term trading, we've got our SaaS ETRM Igloo, where you can do your positions there, which could then be aggregated into a position into either data manager or directly into our PowerDesk core, and you can end up with an end-to-end solution. And finally, after all of that hard work's done, if you wanted to tell the TSO what you're up to and nominate schedules, we've got the PowerDesk scheduler, which allows you to do interconnector trading as well as scheduling to each of the TSOs. So I'm feeling, yes, great that we've got the algo solution, but it's part of all of the whole energy hierarchy and complex that allows you to do everything end to end.
And in the context of all these market changes that you've been discussing, how should people be thinking about compliance?
Well, there's been some good articles that I've read on LinkedIn, but ultimately you do need to download some of the legislation. So when I think about compliance, you start off thinking, well, if I'm on the curve, I'm looking at MiFID II and all of the things going on there. But we've got some enhancements to Remit coming in, which is much more covering the prompt trading. And a couple of things to look out for there is going to be things like kill switches and overall kind of auditability of the algos. Are we going to get to the point where some markets require you to pre-register an algo, or do you have to pre-register the algo ecosystem? I think it's all really being worked out. But the ones I've really picked up on interesting are there's going to be much more of a role for compliance managers in that, and in some of the remit legislation, there's the expectation that the compliance manager, if they're not immediately next to the trading team, to tell them that they need to turn off the algos, that they get their own red kill button as well, and things like that. So I think that the kind of regulation on algo trading is really going to increase the value and the workload of the compliance manager, make them a lot less passive, a bit more active. But instead of having kind of a human gatekeeper to a human trading, I think you're going to have two human gatekeepers to an algo trading. The first being the trader because they want to make money, and the second being the compliance officer because they don't want to lose money.
Well, that brings us to the end of this market update. Thank you to everyone who joined, and thank you, Chris, for your insights. See you all next time.